with the Pioneer Group, and I'm here today to talk to you about conventional type mortgages and how they might be a program that you might want to consider when it comes time to for you to get mortgage financing. Once again, I brought my good friend Jason Jean, the Mortgage Machine, who's here today to talk and give us some insight about these conventional loans and how they differ from some of the other programs that are out there for you. Jason, welcome as always.
Thanks, Don.
So today we're here to talk about conventional mortgages. So go for it.
Okay, so conventional mortgages, kind of what they sound like. They're pretty conventional. They're the ones that they've been around for a long time, probably utilized the most in the industry. Although I think there's a shift that's changing that, and there's a focus towards a lot of the government programs now. But this is these are the loan programs. You also may have heard conforming loans. These are the ones that are considered typically A paper, and you use, essentially you're backed by Fannie Mae or Freddie Mac. Okay, those are the underwriting guidelines that we adhere to. And so conventional mortgages, very, very credit score driven. So if you do have a credit score that's kind of average or even a little bit lower than average, then your interest rate is going to be going up considerably. Whereas some of the government type programs, they don't really adjust your interest rate too much on credit score. But conventional, very credit score driven. So, the higher the credit, the better off you are. And be sure to check out our video on credit. We go through a lot of the details there. The property condition for conventional, you don't really have to have the property to be in the best condition. You can have certain things like, you can have chipping paint. The roof they may not pick on the roof as much as they would on some of the government programs. You still do have to have the utilities on and in working condition. But aside from that, they're really loose on property condition. You also have to be aware of seller concessions on the conventional loan, because sometimes the seller can't really contribute enough to pay for all the closing costs and prepaid taxes, insurance, and interest. So if you don't have that much money to put down, make sure you discuss with your loan officer, what you'd really like to keep in your pocket and what you have available to come out of pocket with, because you may look at a government program for a lower amount out of pocket. Conventional loans do have, this changes over time, but you're typically 3% down, 5% down, loans. So it's not just a 20% down program anymore. And that's because of the PMI that came into the markets years ago, and PMI, has its own separate video, so be sure you check that one out.
PMI is private mortgage insurance.
It is private mortgage insurance, and so that, essentially, anytime you put less than 20% down, you're going to have PMI on your conventional mortgages, and so you pay a little bit extra, or bring 20% to the table, and you don't have to pay PMI. But it does allow people to, to get into the house with 3 to 5% down. So that's actually a great option for a lot of folks.
Okay, so basically, just to kind of recap here, it's very credit sensitive, much more credit sensitive than some of the government loan programs. So your rate, if your credit is less than perfect, your rate's going to get affected by it. So you want to make sure that you're talking to your loan officer to see how that works best for you. There is private mortgage insurance based on less than 20% down. You're going to have to pay that. Many times a conventional program will be the program of choice depending on the property condition. So sometimes we're looking at properties that are less than perfect with a conventional loan. And it can still be, it's not the 20% down that everybody thinks. There are 3 and 5% down conventional programs that you can get into if your credit's good. Your credit typically has got to be better to get into conventional loan programs. All right, so is there anything else that we might share with them, Jason?
Well, we've got a lot more information, but we're going to try to keep these short for you. So any questions, you can certainly give us a call or check out our websites.
Okay, again, thanks for your insight about the conventional loan programs. And As Jason said, for more information about the home buying and mortgage process, just visit our websites below. Please comment, like, share, and subscribe to our channel. We appreciate it. To your success, this is Don Thompson, real estate broker with the Pioneer Group. Have a great day.